Okay, folks, welcome to Market Wrap for Wednesday, the 16th of February. Okay, so earnings trades. So Nvidia, we are in the earnings trade on Nvidia. They reported after the bell. Our strikes are up here. Let's revisit them really quick. And for the benefit of new members, we opened up what you call a strangle, a deep out of the money strangle using put and call options. And we sold those options. We did not buy the options. So we are the casino and not the gambler. So we sold the deep out of the money 315 contracts, roughly about 20%. The shares rallied into the close. So that gap came in a little bit below 20%. I wanted to be at 20%, but just fell shy. The put side was at 207.50. So obviously deep out of the close. What was the outcome? Let's take a look. So Nvidia had good numbers. I mean, they beat top line, bottom line, meaning EPS and revenues. Guidance looks good. The only weakness I saw in their report, and I was kind of surprised about it, was their robotics revenue took a pretty big dip versus estimates. It's a small percentage of their business now, not in the future, but something to keep an eye on. Their personal visualization revenue, I believe that is the Meta type products, they beat. Handily beat. So a good report. So I want to talk about how we're going to manage this. There's so little action after hours that I'm probably going to allow these options to expire worthless, therefore keeping 100% of the profits. Now, let's say an analyst comes out tomorrow, $400 price target, everybody gets excited, the markets are up, they're bidding up Nvidia, well then we will need to book our profits, take a smaller profit, and move to the sideline. But if all things remain as they are now, a market that can't find direction, Nvidia at current can't find direction, then we'll just let the options expire worthless. This morning, Shopify reported earnings, and we had our advanced order of roughly about a 50% profit triggered on Shopify. And last night we had Airbnb come out. They reported, and we did very well on this trade. We booked a 80% profit on Airbnb, and I want to focus on two stocks moving forward. One is Airbnb, the other Nvidia. We have a PayPal trade on right now. I think that we're going to rally shortly. I'll go over that chart in a moment, how we closed. But I liked Airbnb's numbers. I like the monthly chart. I like the relative strength versus the rest of the market. I want to trade Airbnb moving forward with a bias to the upside. How will we do that? Well, we could sell naked puts. We can open up spreads, whatever, buy the common stocks, sell covered calls. We could do a whole host of things. But the key is we want to always be hedged, especially in this market. The other stock is Nvidia. Strong EPS growth. It's in the right sector, making semiconductors for robotics, for the metaverse. It's just the perfect stock. If you want a semi-stock and you want to be in the middle of everything that's innovative, Nvidia. So a very good day for our earnings trades. I want to quickly we'll go over PayPal later. I want to stick with Airbnb for a moment and talk about the monthly chart. Now you can see that ever since we put in a high back in November, a recent high, I should say. It was a double top. We've pulled back this month, really just an outstanding month. Now, if this market begins to roll over, which I fear that it might, we may retrace on Airbnb. I'll be looking at the 180 mark. I'm not saying that that's where it's going. I'm just saying that that is where the next logical support level is for the stock should this market roll over. So we are now halfway through the month. The month is looking good, but we can't trade off the monthly chart yet. The weekly chart looking very good. I think we need to retrace here. If you're already long or you're watching this next week on the replay, when I release it, I think that we could get a retrace back down to 179.50 per share, 180. It doesn't have to be exact. As a matter of fact, let's create an alert here. We'll keep this active for a while. So one strategy that we could do right now, if we, given the fact that we're bullish on it yet bearish on the market, we could just sell premium, sell a 180 strike, naked put, generate cash flow. If it gets assigned to us, great. That's where we wanted it anyway. So that's the way I look at selling naked puts. We're using a coupon to buy our stocks rather than buying them right here in a wonky market, hoping that it's going to continue to show relative strength versus the rest of the market. Let's go to the closing price action of the bond and stock markets. Okay, so the Federal Reserve minutes came out, and if anything, they were dovish. They were not hawkish whatsoever, and that's no great shock. Initially, the bond yield dropped off, but it bounced right back up because the Fed's not serious about raising rates, so the bond market's doing it for them. But I will say we continue to put in some topping action here. Our Stokes are becoming a bit long in the tooth, and RSI may be putting in a lower high. So we may be topping out here short term. Adding to that argument is that the TLT, the 20-year bond ETF, reversed on the session, closed positive. So money started moving into bonds. As for the tip market, good day. It broke support yesterday, rallied back, recaptured support, doji star formation, a sign of indecision. In all probability, we're going to move up higher. The only problem is that you have your 50-day, it's going to cross down below the 200-day moving average, absent an act of God, and that's going to be a headwind. So I would not go buying tips. Why did the tips bounce back today? Simple, because people who invest in the tips fear inflation, and they understand that we have a Fed that is not serious about fighting inflation. But what they will do is kill the dollar. It's clear what they're about to do. They are going to kill the U.S. dollar. The dollar closed down today. If the Fed were very hawkish on rates, raising rates to fight inflation, the dollar would have rallied and closed positive. It did not. I will say, though, down volume dropped off dramatically. That's a big drop. And yesterday's down volume was light. The VIX pulled back today, down nearly 5.5%. We were lower. We held support. Is the sell-off in the market over yet? We don't know. We're not that smart. The market's going to tell us that. We'll take a look at the annotations that we drew on our charts earlier. The stochastics appear to be poised to roll over. That's stock bullish, but we haven't followed through yet. The Dow transports closed up today, a reversal day. I won't call it a bullish key reversal because we did not close at the highs of the day, nor did we hold or recapture support, nor did we fight through the 200-day moving average. We're still trading down below it. So any rally right now is viewed with suspicion. We're simply not able to gather the momentum to push through resistance levels, at least on the Dow transports. And as I always like to say, as go the transports, so eventually go the rest of the market. Remember back here, when you had this blow off top in November, to be specific, the 2nd of November, and that was it. That was the blow off top. All was done. And you fast forward to the trip Qs. Let's go to the same date, November the 2nd. That's right here. All was right with the world. The Qs didn't top out until the 22nd of November. So that's why eventually so goes the rest of the market when the transports top out and begin to put in lower highs and lower lows. S&P 500 daily chart We eked out a gain on the day. We held support for the second consecutive day. How is volume? Volume was light yesterday. It got weaker today. Remember last night we were talking about volume. Consistently, that theme remains the same today. Stokes are hooking up. Always nice to see, but we need volume. Dow Jones Industrial Average. We are entering the pinnacle of this triangle formation. Down volume was light today. That's very good to say. That's good for the Dow stocks. Stokes are beginning to flatten out at the 50 mark. Bullish. RSI trending down below 50, lower highs, lower lows. That is not bullish. The trip Qs could not close positive. They could not gather the steam to close positive. The good news is that down volume was very light. So it's very difficult to analyze a stock or an index as it's in a consolidation range. But I will point this out, is that we are clearly seeing a developing head and shoulders setup. Left shoulder, head, right shoulder. So many times people hear that and like, oh my God, I got to get out of this thing. Don't go crazy. Many times they don't follow through and you get a negation of the pattern. I'm not saying it's going to follow through. I'm not saying it's going to negate. But right now, this is what we're seeing. It is a sign of weakness. Not what you want to see. We're putting in lower highs and lower lows. The shoulder is below the prior shoulder. Never, ever good. So this is why with any long trade right now, we want to stay small. IWM, daily chart. Good day. Closed up on the day, slightly off the highs. Volume was light yesterday, slightly better today, but net, horrible volume relative to the moving average. The banks, they're holding 40. This is the XLF. Holding 40. Stokes are hooking. I shouldn't say hooking up. They're flattening out. Good to see. That's bullish. Up volume was horrible. Technology. A bit of a reversal day. It just couldn't close positive. I would be a bit more optimistic about the XLK. Should it have gone positive? Down volume was light. Consumer discretionaries. Daily chart. I'm surprised they're holding up so well. I don't think that these things hold up. The Fed is going to allow inflation to run. The dollar is going to weaken in value because of that. We import most of our discretionary goods. If we have a weakening U.S. dollar and rising inflation, it's going to make those imports all the more expensive to import, making the ability of many people and the ever-shrinking middle class, their ability to buy these products, nearly impossible because the money is going into the gas tank, mortgages, rents are skyrocketing, not represented by the CPI, and food. So I am not bullish. I think this is going to fail. Energy. It closed up on the day, but it couldn't hold its gains. That is a sign of topping action. That's concerning. Stokes are rolling over. So I think you're continuing to see profit taking here on energy. Longer term, it's going up higher. But short term, profit taking, avoid. EDC. I spoke about this last night. We're going to be looking very carefully at EDC and probably selling some naked puts if the dollar breaks, right? We want to see that dollar break because there's an inverse relationship. Gold. So all over the Twitter sphere last night, I'm reading about how you had an outside reversal bar on gold and on silver. The rally's over, blah, 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 blah. Go running for the hills, sell your gold. Hedgeye puts out a note yesterday morning saying that they sold their gold the day before, or at least a fraction of it, a portion of it. It didn't impress me because I think it's short-sighted. We remained long of our gold mining stocks. We remained long of silver and our silver mining stocks, and it treated us well. Bullish, key reversal bar today. We're going up higher. Stokes are rising. Volume did drop off considerably today. Moving on to positions. Let's before we go to positions, let's go back to see how Nvidia is doing in the after hours session. Good. It's doing nothing. Exactly what we want it to do. Nothing. And this is the value of being an options rider and just generating cash flow. Your potential reward is defined. You know what it is at maximum when you enter the trade. But what takes the stress off of you is that versus being an options buyer, we don't care if the share price doesn't move. We don't want the share price to move. And we also know that those fat options, the ones that were pumped up today as speculators bid up the value of the options, hoping for a big move in Nvidia, well, they're going to get annihilated tomorrow because those options are going to expire, at least at the strikes that we bought at. They're going to expire, in all probability, worthless on Friday, and tomorrow morning they're going to deflate dramatically. So this is why we prefer to sell options at earnings, not buy them. Okay, two positions. GDXJ. It broke out today. I think we will retrace back down to 41.50, and that's a good thing. We'll probably see 43 first, but I think we're going to retrace back down to what was resistance should now act as support. Indicators, very strong. Momentum is gaining. Nugget, we were up over 6.5% on this trade today. And we closed above the 200-day moving average for the first time since November the 15th. Now, the same holds true with Nugget as what holds true with the GDXJ. We may shoot up higher briefly. I think we're going to retrace back down to this support level here at maybe 53 to 52.50. Volume is really, really good today. Let me go back to GDXJ. I got to refresh that chart because something's off with the volume. Yeah, stockcharts.com updated late the volume. And in fact, price was updated as well. Silver, a very strong day. We were up over 2% on this trade. Very strong day, good volume. SILJ, the silver miners, nice little rally today. Up over 2.33% on the day. Volume is good. We'll take it. Gold money. Our Canadian gold play. It's not a gold mining stock. Reversal day. It closed up, which is good. Stokes looking good. Cal-Maine Foods continues to consolidate here. This is a little egg maker that could. But remember why we're in the trade, right? We're in the trade because of, not because of a daily chart, but because of the monthly chart. Okay, we're breaking out. We are at multi-month highs. All right, PayPal. So we nibble a little bit more today on PayPal, and let's go over the reasons why first. Despite closing down over 4.25% today, PayPal's RSI is flat. It's flatlining. It's not validating the lower lows. It's not budging. Stokes are flatlined. This is like a coiled spring. Now, is it done going down? I don't think so. I think it's got two more moves to go. They want it down below 110. What we're going to be looking for is a break below 110 and then a reversal to recapture, because 110 is critical support. I'm going to go to the weekly chart in a moment. Volume rose today, but we are very close to the end of this sell-off. And the fact that we closed down 4.25% versus the Tues closing pretty much unchanged, slightly down, speaks volumes. It tells you the psychology of PayPal sellers. They're selling based upon the earnings report. They hate it. And it was bad. It should have been sold. But now it's becoming an opportunity. And when you take a look at the weekly chart, RSI in a weekly time frame is at 15.39. Very oversold. And here's the support level that I had expected to hold. At current on the week, it did not. But we are at another support level. Last seen back here, April of 20. The extreme low was 107. 50. So I wouldn't go adding more here until we get an answer by the market, because the market's going to tell us when it's done going down. And I'm going to tell you one thing right now. When this thing rips, it's going to rip really, really hard to the upside, because this RSI is unsustainable. This is going to rip up higher. Shorts are going to have their faces ripped off, and we will be a part of it. Back to the daily chart to emphasize. When you have indicators which are failing to confirm lower price action, that's telling you something. When you have Stokes which are flatlined, this is a coiled spring. Now, I'm not saying we're going to rally all the way back up to fill this gap here. I'm just talking about a move, a rally up to the declining 20-period moving average, and we'll be out. I can't tell you where the 20-period moving average is going to be, because we don't know where the bottom is quite yet, but we're close to it. I'm very confident about that. Now, even if it declines down to 130, we can enjoy a rally from, say, let's just round it to 110 up to 130. That's a 20-point move. That's a good move. DWAC, another grand day, serving up a 5% move up higher. I think we're moving up on DWAC. And that is it for tonight, folks. Have a great night, and I will talk to you tomorrow. Be well.